Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, December 12th, 2006. Markets closed, and we had the Federal Reserve leave interest rates alone once again. And the effect on the market was almost nothing. The S&P 500 spiders closed down 15 cents today, but they were able to maintain above this prior level of resistance, which has been acting as support in here recently. So we look at a 30-minute time frame, for instance, we can see that 141 level seems to be the more important area for support for this market right now. Yesterday I had pointed out this trend line, and it was broken temporarily, but it bounced off support, and the support is always going to be more important than a trend line. So when we look at the NASDAQ, for instance, the NASDAQ 100, I've already got that trend line drawn in there, and you can see that it looks like the market closed below that trend line today. So we have a trend line break. So does that mean the market's going lower? Absolutely not. All it means is we probably have a deceleration of the momentum in this market, and it's going to turn sideways here is the more likely scenario, that it turns sideways. And we had confirmation of that earlier when that 10-day moving average crossed below the 20-day moving average anyways. So now we continue to focus on the area of important support, which is $43.30, $43.20 in that area. So you can see we're still comfortably above that level, but this intraday picture is starting to look maybe a little bit ugly. And I hate to always point out these head and shoulders patterns and that sort of thing, because a lot of them don't work, but you could make a case that this is the left shoulder, very messily drawn, but left shoulder, the head here, and then the right shoulder here. So breaking below that 43.30 could lead to maybe $1.30 on the downside. So that would give us a target of about $42 a share, and it seems like there's support there. I'm not making a call by any means. I think that the $43 level is going to be more important, because that's where that rising 50-day moving average is, and we're always going to leave the market innocent till proven guilty, as long as that 50-day moving average is declining. On the opposite, when the 50-day moving average is declining, the market is guilty till proven innocent. You look at the U.S. oil fund, symbol USO, and a lot of people were getting excited about oil last week because it was back above that 50-day moving average, but the direction of the 50-day moving average is lower. So a lot of times you get these shakes just back up above that level. It traps in some longs, some shorts cover, and then you have a refailure, which is what I think you're having here happen in USO. If you look at the inverse fund of the NASDAQ 100, the QID, looking very similar. So it's starting to look like it's making a bottom, but this level of resistance here, about 54.5, that's the same thing as support at 43.30 on the Qs. It's just an inverse relationship here. So don't get too excited about trend line breaks is my main point here. And you can see it a little bit more clearly. The trend line was broken in the QID just 2-3 days ago. We're not going to focus on that though. SMH, let's just make one more example of why you shouldn't pay so much attention to trend lines. SMH broke their trend line. It's showing lower highs once again and lower lows. The more important level of support, though, is down near 33 to 32.75 to 33. Until that level's broken, it's just trading in a range. So I'm not even going to look at an intraday time frame on that one. The mid caps, MDY, continue to just looking at just this, it's very bullish. We've got these higher highs, and we've got this nice series of higher lows. So no reason to think that this market's heading lower. We've got a catalyst that hit the market today. It didn't seem to affect the market much, but the short-term trend in the MDY is lower, so we have to treat it with caution until the buyers can reestablish dominance and push it back up. Probably I'd say about 148.75 or so. Above 148.75, I think the buyers will probably we can see another push higher in the mid cap. So let's go ahead and take a look at the stocks we've been talking about lately. First, we've been involved in this wet seal for almost 2 weeks. We got involved here at $6.80 today. Yesterday, we had raised our stop in here to $7.36. So we were finally stopped out today. I don't say finally, it was a nice hold. But we were stopped out of here with a 56-cent gain in wet seal, WTSLA. Alexion, ALXN, we got involved I don't even remember the entry. It was after this pullback to 43.80 and then above 44, I believe, maybe that day. But we got involved. I'm sorry, it was this day right here at $44 a share, and we got stopped out today at $44.48. So stopped out of there with about a 1% gain. 1.2% gain in ALXN. Advanced Micro Devices, AMD, not AMS. AMD, we'd gotten short at 21.25 on this day, and we've been lowering our stop consistently for the last 3-4 days. It's a slow, steady decline, but it is declining nicely. And I would say at this point, you want to lower your stop to about $20.68 in AMD. I'm just going to write that down so I know. And CENX, why am I updated? CENX, that's right. We got involved over here at 43.80 yesterday. I said raise your stop up to 44.03. The stock gap down, you should have been out about 43.90 for a gain of about 10 cents in CENX. Stocks we looked at for today's trading were Amazon. We wanted to buy that above 39 bucks a share. That never occurred, so there was no reason to purchase Amazon. Guitar Centers, we wanted to buy above 46.55. We had that occur late day, and our stop was then to be at 46.08. That's not true. 46.08 was it? 46.08. Let's take a look at where we can put that stop now. Let's try and ratchet that stop up a bit. Let's put it up to... Oh, we got stopped out then, didn't we? What am I talking about? Okay, so we got stopped out of GTRC. You can see I didn't play the stock today. So we got stopped out with a loss of 47 cents in Guitar Centers. POM, we got involved in this stock above $26.40, so that was right here. Our stop was to be at $26.24. I think you can raise that to $26.28 right now. Dynamic Materials, symbol boom. We were looking for a rally up to 29.20 and then a sell short weakness. The rally only brought it up to 29.10, so there was no reason to get involved in that one. Form Factor, we were also looking for a rally in here. We were looking for a rally up to $37.25. The high was $37.27, and then the call was to sell it short below 37 bucks a share. So nice entry there, and bring your stop way down to about 36.45 in Form Factor. We'd also mention Health HLTH. The stock kind of pulled in a little bit. I wasn't making this an official recommendation, so I'm not really going to continue to update this, but keep an eye on it. That big volume really tells me something's probably brewing underneath the surface here. And finally, we did look at Gateway as well, symbol GTW, and I didn't really give a specific recommendation in there. I did say if you get involved in this area, which was about $2 a share, that your stop ought to go $1.95. I would say if you're in Gateway, raise your stop to break even now.